Welcome to Value Vest Daily. We're continuing our big series, 100 Essential Investing Lessons, taking you from total beginner to seasoned pro. Today, we are really leveling up, covering lessons 11 through 20. This is all about making that critical shift in your thinking, adopting the investor mindset, getting the blueprint for building assets, and taking those first real steps to make your money work for you. Pulling wisdom from legends like Warren Buffett and Robert Kiyosaki. So let's dive in. I want you to just stop for a second and really think about this question. Seriously, are you working for money or is your money working for you? For most of us, let's be honest, the answer is the first one. We trade our most valuable, non-renewable resource, our time, for a paycheck. We work hard, maybe get a promotion, but we're still stuck on that hamster wheel, right? Capped by the number of hours in a day. It feels like you can never get ahead, no matter how fast you run.
But here's the secret. Getting off that wheel isn't about working harder. It's about thinking differently. It's a complete, fundamental shift in your relationship with money. And in this explainer, we're going to lay out the exact blueprint to help you make that shift, pulling from the absolute masters of the game.
Okay, so before you buy a single stock, before you look at a piece of real estate, the single most important investment you will ever make is right here, between your ears. This whole first section is about getting that philosophy right, the foundation that all successful investing is built on.
This one quote from Rich Dad, Poor Dad, honestly, it's everything. This is the cornerstone. It's not about how big your salary is. It's about owning the things that pay salaries. It's about building a system, an engine, where your money becomes your hardest working employee, one that's on the clock 24/7, even when you're sleeping.
And here is the big split. This is the difference. On the left, you've got the employee mindset. Your income is directly tied to your time. You stop working, the money stops. Simple as that. But on the right, with the investor mindset, you own assets, things like stocks, businesses, real estate, that generate income completely separate from your direct effort. This is how you finally break the link between your time and your money.
So, how do we build this mindset? Well, it really stands on three unshakable pillars. First, as the great Warren Buffett always says, you have to stick to your circle of competence. That's lesson 11. In a world buzzing with hype about AI or the next crypto coin, you only invest in what you truly understand. If you're a teacher, you probably have an incredible insight into education companies. Start there. Second, and this is a big one, you have to resist the temptation of get-rich-quick schemes. Lesson 19 is a huge warning sign. Scams are designed to prey on our desire for a shortcut. But look, real wealth isn't a lottery ticket. It's a construction project. You build it brick by brick, patiently. And third, you have to commit to lifelong learning. That's lesson 15. The markets, the economy, it's all constantly changing. Your education has to be continuous if you want to stay ahead of the curve.
All right, so you've got the mindset dialed in. It's time to turn that philosophy into action. Because thinking like an investor is great, but wealth is built by doing. This next section is the how-to, the concrete blueprint for building your own asset engine. Here it is, your starter kit. Step 1, Lesson 13 tells us to focus like a laser on buying things that put money into your pocket. Think dividend-paying stocks or a rental property that brings in cash every month. Step 2, you got to learn to use good debt as a tool. That's from Lesson 14, and we're going to break that down in just a sec. Step 3, don't ever think you have to wait until you have a ton of money to start. Lesson 16 is all about the incredible power of starting small and just being relentlessly consistent. And finally, Step 4, use the gifts the government gives you. Lesson 18 is all about maxing out tax-advantaged accounts like your 401k, which basically act like a turbocharger for your investments.
Let's really drill down on this idea of debt because it's a game changer. There's good debt and there's bad debt. Good debt, like take it out a mortgage around, say, 6.2% in 2025, is used to buy an asset, something that grows in value or produces income. You're using the bank's money to make yourself richer. Bad debt, on the other hand, like that 20+% credit card you use to buy a new TV, is for stuff that loses value. It's a leak in your financial boat, and it's actively making you poorer every single day.
And you can see the difference here. It is just dramatic. Using that mortgage to buy a rental property that's making you an 8% return, you're winning. That's positive leverage. But carrying that credit card balance, that 22% cost, is like trying to run up an escalator that's going down. It's actively destroying your wealth and wiping out any gains you might be making somewhere else.
Here is a powerful, practical number I want you to remember. For 2025, you can put up to $23,500 into your 401k. This money gets to grow without getting hit by taxes year after year. And if your company offers a match, That is literally free money. There is no better return on your investment than free money. Making this a priority is one of the easiest wins in all of finance.
Look, you don't need a crystal ball. You don't need to be a market timing genius. Your real superpower is consistency. By investing the same amount of money on a regular schedule, that's a strategy called dollar cost averaging, you basically automate your own success. When the market dips, your money buys more shares. When the market is up, it just buys fewer. In a market like 2025's, which has been pretty strong, with a 17.7% gain so far, this simple strategy keeps you in the game, capturing those gains without all the stress of trying to predict the future.
So, you've got the mindset, you're starting to take action. But how do you know if it's working? How do you keep score? This last section is all about the tools and habits you need to measure your progress, tweak your strategy, and make sure you stay on the right path for the long run.
This brings us to Lesson 20, and it is arguably the single most important number in your financial life, your net worth. This isn't about your income. This is about what you own minus what you owe. It's the bottom line. It's the one number that tells you the honest-to-goodness truth about your financial health. It's your ultimate scorecard.
And the goal couldn't be simpler. Make that number go up, steadily, consistently, over time. You don't need to check it every day, that'll drive you crazy. But tracking it once a month with a free tool keeps you focused, it keeps you motivated. Seriously, there's nothing more powerful than seeing that line actually trend upwards. It's proof that what you're doing is working.
Now, a huge part of optimizing is understanding the rules of the game. That's Lesson 17. Because remember, it's not just about what you make, it is about what you keep. For example, in 2025, if you hold on to an investment for more than 1 year before you sell it, your profits get taxed at these much lower long-term capital gains rates. Just a little bit of patience can literally save you thousands of dollars, money that stays in your account ready to keep working for you.
So what does all this look like in practice? Now, this is just an example, okay? Not specific advice, but it shows you the principle. You might have a big chunk in a simple S&P 500 fund, some exposure to international markets, maybe a piece of real estate for that cash flow, and some bonds to smooth out the ride. See how these are all pretty straightforward, understandable assets? It all ties right back to that circle of competence idea.
So, if you take only one thing away from our time together today, let it be this. The entire goal here is to stop being the engine yourself and to start building an engine that runs without you. Stop trading your limited hours for dollars and start building your asset engine. Okay, and here's our quick but very important reminder. All of this content is for informational and educational purposes. It is not financial advice. Everyone's situation is unique, so please make sure you talk to a qualified professional who can help you with your specific needs.
If you found this breakdown helpful, if you learned something new today, do us a huge favor. Take a second to subscribe, hit that like button, and maybe share it with one person you know who could use it. It really helps us keep making these daily explainers for you.
And one last thing. We know some of you out there have an appetite for a little more adventure. So, if there's a specific high-risk, high-reward opportunity you've been curious about and want us to break down, let us know in the comments below. We read all of them, and we love to hear your ideas. Thanks for watching.